Tyler, great to have you with us. You've got a sell rating on Palantir, so it's clear where you stand on this. And in your most recent note, you say if you back out some of these SPAC contributions, commercial growth would be much, much weaker. This whole thing doesn't sound good. It sounds like they're making investments in SPACs in return for contracts. Is that what's going on here?
Yeah, I think you hit the nail on the head. I mean, there's a number of these contracts out there where Palantir is invested often in pre-revenue companies that are going public via the SPAC route, and in those contracts, it has provisions where those customers or those companies turn around and use those proceeds to buy Palantir software. So there's a very clear line here. And in fact, Palantir discloses the amount of revenue from those SPAC companies, so investors can do the math. But I think the key point is it is a big growth driver for them in the commercial business. And I think our concern is just that that's a lower quality growth driver as investors evaluate the performance of the company.
Just to play the other side of it, I mean, what is the risk to this strategy? I mean, you say it's lower quality growth. I mean, it's lower quality, I guess, because it's not, they're not customers who actively want Palantir services, but they're customers who are sort of, I don't want to say coerced, but almost like a quid pro quo going on here. What's the downside here? Why not? There's nothing wrong. They're disclosing everything. It's revenue. What's wrong with it?
Right. Well, I think the concern is if you become dependent on the SPAC market, which clearly market conditions where we're at now, there's not as many new SPACs as there were over the last couple quarters. So if that becomes kind of your dependency on growth and the SPAC pooling dries up, that's a big issue. Obviously, the conflict of interest, I think this is viewed pretty controversially by investors. And then, frankly, just from a net income perspective, they had to take a huge write down on these SPAC investments. I think, this past quarter, their loss on a lot of these SPAC revenue contracts was greater than, any revenue that they've actually earned. So from a pure mathematic perspective, it isn't working out well. And obviously, I think these types of arrangements just don't set you up for sustainable growth, which is ultimately what investors are looking for.
Tyler, it's Karen. So getting to this sustainable growth issue, to the extent the SPAC market has kind of imploded, you're going to have tons of SPACs that don't get a deal done, right? So that's and need to be dissolved, or I mean, I guess some of them will be renewed for some amount of time. But so those would end up being probably short-term contracts relative to the very sticky ones that Palantir likes to have their book be, stickier long-term contracts. How do you think about valuing those?
Yeah, I think that's another great point. I mean, I think the growth drivers thus far for the company, I mean, they've largely been large government contracts, large corporate contracts, and so these smaller ones, I think it's really hard to hold that on the same level. It's not a government or a large entity like a Fortune 500 company that has deep pockets, right? And so I think our concern is just that investors are going to sign a lower valuation multiple for a business that's kind of dependent on this funding mechanism.
Tyler, this time last year, I think Palantir got caught up in the whole WSB Reddit crowd. It was a $45 stock. It looked like the sky was the limit. Probably the worst thing that happened to him. I was on that bandwagon incorrectly. But is there an argument to be made, obviously too reliant upon the government, if they could figure out sort of mid-sized business, sort of a downscaled offering to those businesses, does Palantir make sense at a certain point?
Yeah, I think that's an area to watch for sure. I mean, I think our concern has been it's been a business that has very high exposure to the government, 50-60% of revenue. There's very few software companies out there that have that type of exposure. And this is a business that's been around for a while, despite the recent public listing. And they count only a little over 100 customers. And so our view is that a lot of customers have looked at the Palantir technology and passed on it. It doesn't mean that they won't ever revisit it. But I think if you really dig down and deep and understand what Palantir is, it really isn't true out of the box software. It's really kind of packaged custom software that's being deployed by Palantir's engineers. And so I think that type of motion, very successful for the government. I think we're optimistic that Palantir can continue to grow in the government. But in the enterprise, that's just not the way that software has historically worked. And so, we're keeping an eye on the total customer number, but the fact that that number is kind of being polluted by these SPAC deals, we just haven't really seen any signs that they're turning the corner. But I think it's definitely something to watch.